Welcome to this course on financial derivatives and risk management. This is being offered to you by IIT Roorkee through the NPTEL program. Financial derivatives are sometimes construed as the wild beast of finance. They are termed as the wild beast of finance. Why it is so? Because numerous financial debacles during the last 40 years in particular have been attributed to these financial instruments. In particular, if you look at the Barings Bank case, the JP Morgan case, the killer Peabody case, and to some extent even the Enron case, they have been attributed to the ill effects of financial derivatives, and significant investor wealth has been wiped off. Now, on the other hand, it is a paradox that notwithstanding this fact, significant growth in trading volumes has taken place ever since financial derivatives have come into the market in an organized form. For example, in India we had financial derivatives for the first time in June 2000, and thereafter the growth of volumes has been phenomenal. So the objective of this course is to explore this dichotomy, to explain this dichotomy. On the one hand, they are construed as the manifestations of debacles, and on the other hand the growth volumes are massive. So we shall be studying the fundamentals of financial derivatives. We shall be talking about the pricing of financial derivatives, the principles governing these things, and then we shall be talking about the application spectrum of financial derivatives. As far as prerequisites are concerned, I shall assume a very basic level of knowledge of finance. I shall also expect the students to be conversant with the basic mathematics and statistics at the level of +2 or senior secondary, particularly probability distributions, normal distributions, and so on. So these are the fundamental prerequisites. As far as the USP is concerned, the current literature on financial derivatives can be segregated into two types. One is that offers a superficial knowledge about the instruments, focusing on the trading rather than the mathematical basics, rather than the mathematical fundamentals. And the other sector relatively exclusively focuses on the pricing of these instruments on a strong, rigorous statistical framework, probabilistic environment. My objective of bringing this course to you is to blend these two courses at these two variations and to provide a middle of the path approach, wherein I shall be using mathematics to the minimum, but I shall be using mathematics wherever it is mandatory. Nevertheless, wherever some new concept has to be introduced, I shall start from ab initio, start from scratch, and explain the concept to you in detail before using it for application purposes. So I look forward to welcoming you in this course. The course consists of 60 lectures spread over 12 weeks, and the usual structure of examining will be implemented as per the NPTEL framework. Thank you.